Hey, hi. I just want to share with you today to talk about the company known as PayPal. Um, I know that PayPal is now hovering at around 60 over dollars. It's pretty much at its all-time low. If you look at the PayPal charts, yeah. So basically, if you look at it, it has pretty much crater quite a lot, at $70. Today it went up a bit, and it was even so much more lower than has gone down to somewhere I think like 2018 or 2017 pricing. And if you look at the revenue on 2017 and 2023 right now, 6 years later, of course they have a growth from a medium-sized company to a big company, and their revenue also have grown a lot. And you can see their revenue is it's a highly profitable company. The company revenue is 27.5 billion, out of which 2.4 billion is net profit. um, so basically, their revenue has increased from year over year of like 21 billion to 27 billion. Of course, the COVID era actually accelerate the use of fintech by many people. And I think currently at 27, 28 billion per annum would be where it kind of like stabilize. Take note that actually how PayPal makes money by pressing fees charges on payment receipts. While many transactions via PayPal are free, merchants operating premium or business account pay a fee for each transaction. The fees are usually about 30 cents with a 1.9% or 2.9% surcharge. Very similar to credit cards. Um, so basically, they have 400 million members. Um, and they also have cash in hand. There are members who hold the money in their account, and they would use it for, you know, buy up like short 2 year treasury and all that, get a good yield of like 4 to 5% right now. But why PayPal shares, in my opinion, is actually not a very good stock to buy at this right moment. Yeah, of course, you have PayPal is a very fintech is a very crowded space. It doesn't really have a moat, unlike like Tesla or let's say Grab or Palantir. Uh, you got Stripe that's owned by Elon Musk, that's going to be going for listing as well, and their fees are lower. And then you have Square Cash apps, which are very popular now in UK and US, and owned by the Twitter boss. And then you got SoFi, which is also a good startup. And they also provide student loan as well and auto loan for refinancing and mortgages. Um, PayPal hasn't started with refinancing yet, and of course, SoFi now has been the talk of the town, whereby they have all this loan forgiveness possibility happening right now with Biden trying to get loan forgiveness, and then the federal court, Supreme Court actually refused it to say that whatever actions done by Biden is unconstitutional. And if that happens in August, right, means all the students or people who are just working and have student loans would be poorer. But back to this crowded fintech space, right? Um, the thing I like to say is again on uh, this tech stock probably would be in a plateau right now, whereby their revenue would probably be hovering plus minus a few percent, single digit growth. What I'm trying to say is this, and then their profit might be eaten up. The pie might be shared by, whereby SoFi will have a bigger pie, and because they focus more on the young people who have student loans and all that. And of course, their revenue 25 billion. Just now earlier I mentioned was 27. They earn from both sides, merchant and consumer. And so the only problem is their debts. They have a total debts of for fiscal year ending 2020, 2018 to 2022 average of 5.2%, operating at a median total debt, total capital of 4.1% from fiscal year ending December 2018 to 2022. Looking back at the last 5 years, PayPal's total debt and total capital peaked in March 2023 at 13.6%. Of course, the lower the number is better, right? So if you look at the long-term debts of PayPal, is at over 10 over billion, a 29.42 increase from 2021. So you can see that the long-term debts for 2021 was 8.04. So it's gone up to about 10 billion. Actually, I just couldn't understand how this kind of platform companies where they just rely on human capital and the software, right, can have so much debts. Um, and if you they have like over about 20 over billion revenue, and if assuming that they maintain at 27 billion, 28 billion, and they earn about 3 to 4 billion per annum, right, it would still need to take about 3 years. And and remember all those years like 2018 to 2022, the interest rates are really, really low at 0%. And now we are talking at 5%. And definitely some of the debts by PayPal is due for refinancing or pay full redemption this 1 to 3 years or 4 years. So as I mentioned to you before, the Fed will maintain the rates higher and longer, which I think is very, very likely. They might not hike, but they will maintain this rate higher and longer, which of course will help the US dollar as well. And I did mention to you earlier was billionaire Chamath Palihapitiya warns corporate America to hit massive wall of debts in looming credit crisis. So you can see company that has a huge amount of debts, just be careful unless they are be able to break even quickly within these few quarters, like Grab, hopefully, which I'm looking at, or Robinhood, which is a cash debt-free company, or Palantir is a debt-free company as well. To be able to find those company are very important so that they, even though they get Paul Volcker up to 10%, right? Cash rich company, no problem. Even though the whole economy turn into recession, um, they will still have, they just have lower revenue. They will not have high operate OPEX costs. So I hope, yeah, you appreciate my take on not recommending PayPal, despite a lot of YouTubers think that PayPal is a good share or buy the dip right now. And maybe you can come back to it when there are some interest rates cuts coming up. So I hope you like the video and see you again.